Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello and welcome to the Security Token Show. We're your hosts. I'm Herwig Konings and I'm joined as always by Kyle Sonlin. We're here in sunny Miami, Florida, bringing you all of the latest security token news. We've got the latest industry updates, the final security token offerings of the year, and of course a nice trading market update, finishing off with our main topic, which is actually going through Kyle and I's predictions that we made at the beginning of this year. So it's going to be a great, exciting episode, Kyle.
Our predictions for 2021 was actually one of our most viewed episodes so far. So let's tune in and see how we do, but that's later in the episode. First, I want to mention that this episode is sponsored by Glozal. Glozal is a Miami tech company. They're working in the NFT space as well as issuing their own security token, and they are a great partner. We actually recorded a full-length interview with one of the executives from the Glozal team. You can see some of that. You came out great here in Miami, and so you can check that one out. It's also going to be live on YouTube, so definitely tune in. Thank you to Glozal for sponsoring this week's episode. And
now, of course, Kyle, we got to get off with our top 5. This is everything you need to know that happened last week in the space. Starting off number 1, Franklin Templeton. If you haven't heard of Franklin Temple, they are $1 trillion, $1.5 trillion in assets under management. That makes them a ginormous financial institution. And they have created something extremely innovative that us over here at the Security Token Advisors team, we've actually only been ruminating about this. And now we've seen a financial institution bring to market a mutual fund completely built on the blockchain to improve record ownership, efficiencies in distributions. It's the whole shebang here. It's an amazing 24/7, 365-day trading product, all without any humans handling all of this paperwork.
shout out to Franklin Templeton, another huge institution getting involved in the blockchain space, understanding the value of tokenization for real assets. And moving into number 2, we have some U.S. regulatory updates. There was some drama in most of the branches of government. First, we start off with Senator Elizabeth Warren. She certainly has been highlighted multiple times over the last week or so, getting dunked on from social media. And now, unfortunately, she came out against DeFi, saying specifically that it's too risky. She targets that it's the riskiest, the most dangerous, as she calls it, part of the cryptocurrency industry where you could potentially be doing business with a terrorist, in her specific words. And so she also argues that stablecoins will fail alongside DeFi because of the fact that they are leveraged or they're not fully backed one-to-one to the US dollar.
She cited that DeFi was the most dangerous part of crypto. But
ridiculous.
We actually saw on the other side of the table with the regulators, not the legislators, over at the SEC, Gary Gensler released his agenda. Amongst many things, improving capital markets, not so much, according to one of our favorite crypto mom SEC commissioners, Hester Pierce, as well as Elad Rossman. So that's 2 SEC commissioners, both the Republican SEC commissioners, but nonetheless vocalizing that they are not a fan of where Gary Gensler, who is the SEC chair, where his focus is in the upcoming year. It includes things like an expanded accredited investor definition, as well as potentially going after the Reg D exemption and seeing if there are more investor protections, he claims, that might be able to be added.
Yeah, she said, quote, "The agenda put forth by Chairman Gary Gensler through its silence on crypto signals the market can expect continued questions around the applications of securities laws," end quote. So she is recognizing that the silence is deafening and something needs to happen soon.
Moving on to number 3, Bank of America, another major banking institution, has gone out and said that Avalanche is actually a viable option to Ethereum. Both from a scaling perspective, they cited that there's 4,500 transactions per second. There's, of course, enough throughput. And, of course, they've seen immense success in DeFi. Since August alone, the total locked-in value on the Avalanche ecosystem is now over 6,000%. in increase since August. I think that's crazy, Kyle.
Some basic stats for you, as you mentioned, Herwig, $11.2 billion in staked assets on the Avalanche protocol. That's a lot of money in assets. And as you said, it's grown tremendously just the last couple of months. For perspective, Ethereum's at about $145 billion, so about 13 times larger there. And then the market cap for AVAX is 17 times smaller than what we see from Ethereum. So you can kind of make that comparison how you will. It's now the 12th highest cryptocurrency by market cap. And moving into number 4, we have Securitize. Securitize launched 2 new S&P Dow Jones Index funds that are fully tokenized. The first one is the S&P Crypto Large Cap, which essentially is an auto rebalancing portfolio of the top 30 or so cryptocurrencies based on performance, and that rebalances. It's up like 300% this year alone. They also are launching a tokenized fund backed by the S&P Kensho New Economies Composite Index Fund, which is one that tracks a little bit more broader in terms of fintech, artificial intelligence, VR, nanotechnologies, a lot of that kind of stuff, and bundles all that together. I think it's seen about a 30 or 40% return, year over year or over the last couple of years. So things are going really well there. They're working with Anchorage as well as Copper and Interactive Brokers to launch these products and have the full blessing of the S&P and Dow Jones. I think their head of innovation was quoted in the press release citing this opportunity for tokenized fund products.
Very impressive. It's supposedly the first fund to be based on indices to be tokenized. So great accomplishment there, Securitize. Moving on to number 5, last but not least, we've got KKR, massive private equity firm making its first ever investment into a crypto firm, leading the round of none other than Anchorage, who we just mentioned as one of the partners in the Securitize fund. So Anchorage, previously being known for the first crypto company to receive an actual national bank charter from the OCC, they previously raised $80 million, and now a $350 million Series D is going to help them expand a heck of a lot further and continue to improve their infrastructure. I think that's absolutely incredible, Kyle.
It pushes their valuation to over $3 billion, and yet another major unicorn on its path to Deca unicorn status.
And with that, let's head over to Jessica Burns and get the rest of the industry news.
Hello, and welcome to the final industry update of the year with Jessica Burns. We're kicking things off with the Central Bank of France, which has actively experimented with the security token technology. Last week, they announced that they have successfully completed the last experiment of its program for the international settlements in central bank digital currency, CBDCD. Launched in March 2020, this final experiment was jointly conducted with a group of private actors led by HSBC. The experiment allowed the transfer of the digital pertaining to the digital bonds across chains to trigger automatically and atomically the settlement and the accounting of the securities, cash, and foreign exchange flows in the various environments, while guaranteeing the Banque de France could control the usage of the central bank money. That is a big deal, and they deemed the trial a successful benefit to the banking system. Speaking of HSBC, they also worked with Wells Fargo to settle Forex transactions using the blockchain. So what happened was Baton Systems, the company behind the core FX distributed ledger technology used by the two banks, said that the platform is used to settle FX trades using real currencies and real accounts in less than 3 minutes. That is incredibly fast and efficient, and that is the power of the blockchain. Next, we saw security token exchange and issuance platform Tokenized announced that they have achieved regulatory approval in Barbados. They plan to launch the platform next quarter, where investors can instantly deposit their money and buy the tokens they are interested in, with all trades executed through a regulatory brokerage, they claim. That means more good news coming from the industry, that hopefully we can expect to see some security token listings appear on the launch. Cryptocurrency exchange giant Binance has announced that they will withdraw their bid for a license in Singapore, and they will wind down its digital payment token business. The only reasoning they gave was that they did it for strategic, commercial, and developmental purposes, and they said they would refocus on the local unit's operations on becoming a blockchain innovative hub. And over in Switzerland, we saw a SEBA bank launch a regulatory digital token backed by physical gold and exchangeable for delivery. SEBA claimed that due to its regulatory complaint nature and the low volatility of gold prices, the gold token could eventually be used as a stablecoin for on-chain transactions. And now that is cool. And last but not least, we got Katia and Bank Frick out of Liechtenstein collaborated to do a complete blockchain-based loan securitization via the Kadia platform. They said their technology goes further than anybody due to using the smart contracts for the automated and rule-based control of payment flows in accordance with the previously agreed transaction conditions or covenants and the associated cash flow waterfall structures, aka complex loan transactions completely automated thanks to the blockchain. Well done, Kadia and Bank Frick. And that's all we've got for review from last week. Now let's go over to John and get the latest STO and market updates.
Forever thankful for the enlightening industry updates from my girl Jess. But happy holidays, my fellow tokenizers. I'm John Pittman, one of the Token Boys. And since we're in the season of giving, I bring to you here today a very special gift, your weekly STO updates. So let's go ahead and dive right in. My updates this week are all tokenized funds. Always a fun time when talking about funds. So first, we have big news coming out of Securitize, who just announced that they are launching 2 tokenized S&P Dow Jones index funds. Believe it or not, these are the first funds to be tokenized based on indices from a major index provider. The first of the 2 tokenized funds is the S&P Cryptocurrency Large Cap X Mega Cap Index. This fund offers exposure to a diverse blend of top-performing cryptocurrencies which rebalance based upon performance. Year to date, this index fund has experienced a near 300% return. The second tokenized index fund launching is the S&P Kenosha New Economies Composite Index. This fund offers exposure to global investments in technologies such as fintechs, AI, VR, nanotechnology, amongst a few others. Over the 3 years, this fund has achieved an approximately 27% annualized return. Great track record. With the addition of these funds, it proves that tokenization is generating interest from institutional investors who are looking to take advantage of the easier access, greater efficiency, and lower trading fees that blockchain technology promises and they provide. Both funds will be offered through Securitize's digital asset management arm called Securitize Capital, and they'll also be available on the alternative assets marketplace, which is called Securitize Markets. The funds are open for investment immediately and are going to be tokenized using the Algorand blockchain protocol. Our next update is a tokenized high-yield debt fund from a company based in Luxembourg called Aquarius. So Aquarius, they were established to address the growing demand for stable yield-bearing products in the financial markets. The target audience for this product are going to be institutional investors looking to optimize their asset liability management. People like corporate treasurers, businesses, and accredited investors now have the option to send Aquarius their fiat currencies, and in turn, the fund will convert those currencies into USDT, which is just a short term for tether-based stablecoin. This conversion provides liquidity to top-grade digital asset borrowers in return for yield. The fund is structured to capitalize on the imbalance between borrowing and lending rates in a $100 billion stablecoin market. Aquarius is able to do so because the demand to borrow stablecoins like USDT, it outweighs the supply of stablecoins, allowing investors to now take advantage of this imbalance to generate positive returns. Stablecoins like USDT provide fast, inexpensive global value exchange over the internet without the downside of extreme volatility that is seen with traditional crypto. Accessing yield from crypto markets currently requires a crypto wallet, conversion of cash into cryptocurrencies, navigating various risky platforms offering unsustainable high yields, and negotiating borrow lending terms with multiple counterparties, and that's just along with a bunch of other complexities. The Aquarius Fund aims to simplify this process by taking over the negotiating with each entity separately and then allowing investors to simply subscribe to the fund and have access to the stablecoin yield market. There is going to be a 1% management fee along with a 20% performance fee, and all of this is included in the Algorand-based tokenized fund. For liquidity, token benefits will afford investors the option to trade their fund tokens to other whitelisted investors on Stalker. You got to love that secondary market. Before I let you go, I have 2 more things to mention. First, if you're a company in the process of launching an SEO, please reach out to us here at Security Token Market. We would love to cover you and include you as we bring this industry mainstream. Secondly, if you're a company looking to tokenize and need some help along the way, please reach out to our sister company, Security Token Advisors, one of the leading consultants in the space. And that wraps it up for me. I hope you guys enjoy your Christmas and have a happy new year. On the Keith with your market updates. And I will see you guys in 2022 on the other side of the blockchain.
Welcome back to another weekly secondary market trading segment. As always, all news and pricing data is sourced from STOmarket.com. Today, we have the total security token market cap at $1.018 billion, which is actually down about 6.6% from $1.09 billion last week. Making highlights over the past few days is Figure Technologies, Inc. The startup founded by Mike Cagney created a platform to help private companies raise and trade equity using blockchain. This week, the firm announced that Figure Equity Solutions has already helped manage, raise, and trade more than $4.7 billion in equity. We will be monitoring this development closely as Figure continues to develop its platform. We also have a new addition to our list of security tokens this week, the Millennium Sapphire token, representing both fractionalized ownership in the Millennium Sapphire and future pro rata share in the potential profits driven by the fine art security token and NFT studio. The token is currently trading at $7.25 and is already ranked number 4 overall with a market capitalization of $72.5 million. We have Spice VC's token making some moves this week as the biggest gainer. The token is up, trading at $4.50. It's up 57% from $2.85 last week. Although the token is leaning towards an increase in value and trading activity, it is almost completely knocked out of the top 10 security tokens as others pick up speed. Blockchain Capital, the only other tokenized VC firm in the top 10, experienced incredible gains for its token. It's trading at $11.48, which is a solid bump of over 27% in price, up from $9 about a week ago. Heading into the negative territory for the week, we have Overstock's OSTKO continuing its free fall down to around $55 from $68 last week. The token fell by over 19% in price while weekly trading volume followed suit. The recent decline in price for the security token may be on the back of news about public health issues leading to supply chain shocks around the globe. Also in the red for the week, we have the Science blockchain token as it fell dramatically down to $1.25 from $1.90. It's a drop of 34%, sending the token much further back in the rankings as it now sits in the number 12 spot. T0 security token is also down big for the week. The token is trading at $2.35 at the time of recording, which is a drop of just under 30%. Volume remains relatively unchanged, but this drop marks an official extension of the great losses that holders of the T0 token have experienced in the second half of this year. As a subsidiary of Overstock, the token's losses may be loosely correlated with the recent drop in price of the large online retailer's token. Moving into our weekly section on tokenized stocks, we have the Grayscale Bitcoin Trust tokenized shares finally reversing the trend of continuously declining weekly trading volume numbers. This time around, weekly trading volume is at 21.3 million from 17.5 million last week, which is an increase of about 21%. Tesla tokenized shares saw an increase of about 10% in weekly trading volume as well, as it rose to about 8.8 million from 8 million flat the week prior. Across the board, trading of tokenized stocks seems to be picking up on FTX in the past few days. With that said, it's been a great week, another fun week in the markets. As always, do your own research and hit me up on Twitter at KeithDLT to send me all your hot takes. See you next week.
Wakey, wakey. Welcome to Inside the Metaverse with your host, Eve Van Call. We go over the top breaking news related to the Metaverse weekly. You ever take a road trip with your family and there's always that one person that wants to stop to use the bathroom at every rest stop? Well, this is the Metaverse road trip and that friend is China. They are mad about the Metaverse, like, come on. China's central bank has caught on to the Metaverse trend and are now monitoring the Metaverse and the NFT space. So far, it's not an effort to try and shut down the space, but to add much needed regulation. Next, Twitch co-founder Justin Kan is launching a NFT marketplace and it's called Fractal. Fractal will act as a primary market in which gaming companies can drop new products for fans, as well as secondary market where users can sell their NFTs to each other. The Fractal team also hopes to develop new use cases for NFTs in gaming. Do you smell what the Twitch is cooking? Next up, RTF KT is now part of the Nike family. Nike said Monday it had bought the virtual sneaker company RTF KT for an undisclosed amount, as the sportswear giant looks to quickly expand its footprint in the fast-growing metaverse. This has to be one of the most secret, unexpected moves so far in the metaverse. I need to clap it up for Nike and their team because they are on point. Lastly, Solana is making the radar twice this show because Fractal just wasn't enough for them. Solana is going hard into Web3 gaming. Solana Ventures is hitting with a $150 million Web3 initiative with Forte and Griffin Gaming. This is Solana's second gaming-focused investment after joining forces with FTX and Lightspeed Ventures to create a $100 million Web3 investment initiative. That was Inside the Metaverse with your host, Yves Van Cole.
And now for episode 121, the last one of the year, we've got our main topic, of course, where we annually go through the predictions that Kyle and I made at the beginning of the year. But before we get to that good stuff, we have to start, of course, with our companies of the week, the last entrance to the company of the year winning chance for next year's episode. So Kyle, who is your final entrant?
My final entrant company of the week, episode 121 of the Security Token Show. We've got Nexo, and Nexo is launching an NFT lending and art financing platform alongside Three Arrows Capital, the investment firm. And so basically the idea here is that specifically for the Bored Ape Yacht Club collection, as well as the CryptoPunks collection, you can actually stake your NFT inside of the Nexo protocol and get a collateralized loan for it. You can still keep that NFT, you can still hold on to it and get exposed as it appreciates, but capitalize on the fact that it's a very illiquid asset. You can get leverage on it. Nexo is a platform that's been doing this for quite a while. Three Arrows Capital has a good reputation in the crypto space from an investment firm perspective. So this seems like a very fascinating product and one that I think makes a lot of sense for the NFT world.
I think it's fantastic, Kyle. Investors have a lot of a challenge. Anyone who owns art, it's not easy for them to just go out and collateralize it and get a loan. There are not a lot of options to do that, and the process typically when they're trying to do it is very difficult. And now you're telling me that a outside third-party firm has just gone ahead and offered against massive NFT collections, capable service, financial services, lending, and these things like that. That's incredible. That is definitely the power of blockchain. Great choice.
How about you?
Well, I had to go ahead and give it to Anchorage. I mean, when we reported that they raised $350 million from the first ever crypto investment from KKR, which for anyone who knows KKR's history, they have been pioneers in the financial innovation space, and now they are saying crypto is legitimate. And that's not all. Goldman Sachs, BlackRock, A16Z, Alameda Research, which is Sam Bankman-Fried, SBF was from FTX's side of things. So there's an incredible roster behind this company. And of course, as we mentioned earlier on the show, they've made some incredible accomplishments, not only in the crypto space, but also in the security token space, partnering with a lot of different security token products to get them to market. And so for all those reasons, in fact, Kyle, I had to give them company of the week also because I actually did meet Diogo Monaco. Diogo is actually the president and co-founder. We actually had the pleasure of sharing a panel. You can go check out that panel on YouTube anytime you want. But we talked a little bit about how Anchorage is foraying into the security token space with Securitize's products. So check that out if you have a chance. But meanwhile, Anchorage, congratulations. You're my last company of the week.
I love that choice. They're doing awesome things. As you mentioned in the top 5, they are the first and maybe still the only nationally chartered banking license in this space that operates in the crypto space.
Big deal.
I certainly know they're the first, and so they've been very crucial in a lot of the crypto adoption from bringing in banking operations. But as you mentioned, it's great to see them moving into the security token space. I think that the real financial institutions and the players that understand how the infrastructure works recognize tokenization for securities as a huge use case.
I think that rounds it up. We can get into our main topic. We've got a ton of predictions. We were having some fun with it last year, at the beginning of this year, I should say. So why don't we just go rattle them through one by one? What do you think? Of course, let's start with the juiciest and biggest one of them all, the security token market cap predictions. This is where we predicted each what is both the total market cap of the secondary market as well as the total volume throughout the entire year. And we actually had some interesting predictions. We reversed kind of our original trends. And Kyle went and predicted $2 billion for the total market cap, and I predicted $3 billion for the total market cap, but we reversed our trend for the volume, and actually Kyle actually said 300 million in total trading volume, whereas I only said 225 million in total trade volume. And Kyle, how did we do?
So we started the year at around a $300 million market cap, just to give everybody perspective on where we were looking and how this was projected forward. And now we're looking at about a 1 to 1.1 billion market cap that's tracked by security token market. So based off that estimate, we were both undershot, unfortunately, this year, but I don't think that fully counts some of these private blockchains.
So
we just covered Figure, who has done like $4 billion in trading volume, I believe.
Yeah,
and there's
Tokeny, right?
Tokeny,
They had
internationally.
a $28 billion company tokenized.
And doesn't
on the
factor in
platform.
iStocks, who are still trying to work in and figure out the ways to integrate the Singapore financial institutions and their
That's right.
data. So I think that from the market cap perspective, we can definitely probably say that we're both wrong and undershot what
right.
the actual real,
Yeah, I think what's reported is light, but as you said, what's actually out there is far, far, far bigger. 4.7 billion from figure alone would totally wipe out all of our guesses right there. So that's awesome news. Moving on, we actually went ahead and made some regulatory expectations here. I thought that there would be some kind of a crypto bill that would pass through the legislation at some point throughout this year. And unfortunately, that did not happen. I think it was something like over 24 bills.
We reported on all of them on the show.
A lot of different things, but nothing ever made its way through. And maybe that's a good thing, but that leaves regulators with the existing framework to push. And that's actually where you predicted that there would be an additional expansion of the accreditation definition. That was for good reason. There was hints that perhaps the SEC would expand based on a certain knowledge test or perhaps certain degrees. Unfortunately, they only made it possible for investment bankers to also qualify and instead have done nothing since. That might be because there was a new SEC regime that came in about. But as we mentioned earlier, there's probably a good chance that they're now going to revisit the accreditation definition for inflation, which means that it's likely going to restrict the number of people that end up qualifying.
So that's I mean, you hate to see it. I was excited about this with the idea that we could democratize capital markets. But I think the good thing to take out of this at least is that with the advent of Reg A pluses and Reg CFs being a viable opportunity, as well as 144 allowing for retail trading on secondary markets, that accreditation thing actually may not matter quite as much in the future as it once did. So hopefully that's where we can look forward.
But you were right about this next one, Kyle. You actually had predicted that a major U.S. bank would use the blockchain for a product. I mean, earlier, just in this episode, we announced that Franklin Templeton went ahead and launched a mutual fund on the blockchain. And we've seen a couple other big examples. And you actually also predicted, and I think correctly, that they would also get involved in DeFi. And although not a U.S. institution, we did see Societe Generale, who had tokenized a bond, go ahead and submit to MakerDAO to go ahead and leverage their platform for liquidity. So that is a major, major example of a giant bank. That's a top 50 bank, folks, in the entire world, leveraging DeFi for their tokenized product.
Yeah, specifically decentralized governance, which is kind of a fascinating perspective here, that they submitted a proposal to be voted on by the greater community. That's a fascinating piece of this kind of, there's the corporation, there's the large investment banks coordinating and cooperating with the other members of the consensus of MakerDAO. A fascinating perspective to see how that continues to grow, those relationships between the traditional institutions and these new nodes or these master nodes that make a lot of the decisions on behalf of smart contracts. Also, we saw Bank of America working with Paxos to settle all of their securities on chain. We'll see if it's how quickly that happens, but that announcement came out and they've recorded transactions on chain working with Paxos. So there have been a lot of examples of banks really starting to get involved on the security token side in terms of settling their assets on chain.
And I ended up making some predictions on the infrastructure, folks. I had actually thought that over $300 million would be invested into security token infrastructure companies. That's absolutely the case. We've seen some monster rounds be announced for Securitize, for Figure, for many of the other players in the space. In fact, I had predicted that a major bank would be involved in one of those rounds, and we did see Morgan Stanley actually participate and lead the round into Securitize. So I think that's definitely a check. But what may be not so correct was that I predicted that there would be a lot of M&A activity, specifically 2 companies getting rescued. And I think that was definitely probably the case between Open Finance and INX.
Yeah.
We'd known and reported there were some issues.
There was one.
And then INX came in. But I don't think we could come up with a second one that was really, a good old-fashioned, I'm going to save this company through a classic M&A opportunity. So I didn't get that one.
1 out of 2. You were close. You were definitely on the right track. And it seems like the INX acquisition kind of fit right in your prediction, at least.
And And your prediction the next one wasn't so right either. 100 million dedicated STO fund.
And yeah, my idea
explain
was
that. What is a dedicated STO fund?
Yeah, I thought we were going to see a few funds come out and dedicate some capital towards investing specifically in security token offerings. Now, we did see a $5 million fund launched by Green Pro in the Crypto SX ecosystem. So I was about a 20th of the way there with my prediction. Even market makers, we talked about this before, but I figured somebody was going to launch a fund to kind of provide some liquidity here. It didn't quite happen, but that opportunity is still there for anybody listening that wants to jump in and participate.
Well, and then we did actually make some predictions around the market. I had some big numbers. We got a little excited. I think we were feeling it a little bit.
Yeah.
I said that there would be 200 listings over 20 different platforms with 1,000 primary offerings in the course of 2021. So let's review. 200 listings. What do you think?
I think we're there. I think we've got over 200 thanks to Realty listing 138 different real estate properties and counting. We've got obviously the main, crew here as well as internationally. I think,
That's right.
there's
about all the different players that we actually don't necessarily have insight to. There's a ton of players in Singapore, iStocks, HG Exchange, ADDX.
So we're already tracking 200 on security token markets.
Exactly. So there's definitely a bunch of different things. We got the markets there, but 1,000 offerings. It's a possibility. We certainly didn't report it. So it's definitely a clear no on that front. But as we saw earlier with the market, we don't know how many security tokens have come to market that we actually didn't report on, potentially NFTs that end up qualifying as securities, or just good old-fashioned security tokens that happened in parts of the world that we just don't have any coverage on.
Potentially saying 1,000 tokenized assets is potentially an angle that we could give you the 50-50 on it.
We're going to let it slide. But what was a certain accurate prediction, well done, Kyle, was on Coinbase. They did do a successful IPO. But unfortunately, you only did get it half right because you were hoping that they would also leverage their platform for security token trading.
They had that ATS and they just shut it down.
They just didn't do it. They just haven't done it.
But I got the IPO right, so I'll take that. If only they would have done a security token instead. And you, Herwig, a $100 million Series D security token offering would have been electric. We saw the $75 million Reg A Plus from Exodus, but we just couldn't quite get there.
I had some specifics. I had it be venture capital backed. It had to be a Series D. So this means it was a very institutional startup. And unfortunately, no dice, no use case for a security token yet there.
So regardless, very fascinating. And your final prediction.
My final prediction. This was it, folks. I said that 50% of all primary offerings in the market would be real estate focused.
We saw Nolan Reynolds come to market with a big deal. We saw Aspen Coin list. We talked about Realty bringing on a couple hundred assets, Figures doing HELOCs. How do you feel about this one?
50%, probably not, but potentially one of the most tokenized industries, if not the most, probably.
I think so.
But 50%, maybe not. And it depends on the volume versus the number of
Right, exactly. Is it trading? Is it volume of assets?
We won't get into the nuances. I know you're all dying to hear our new predictions, but you'll have to sit tight till next year. And meanwhile, happy holidays and happy new year. Please, hopefully you enjoyed the show this year. We are so open to suggestions, feedback. We continuously want to make the show better for you. We've got a lot of great stuff coming out as well from the security token market team next year. I know we're both super excited.
Cannot wait.
Don't forget that we are still open for now for pledges. If you're interested in the security token market crowdfund, you can go learn more about that, link in the bio. And of course, follow all of our socials and securitytokenmarket.com for all of the information on our blogs, our news, our research reports. There will be some major things coming out.
And remember, we've now launched a referral program for our newsletter. You can win STM swag, coffee cups, and even a trip to Miami to get dinner with the What's Drippin' team. So if you want to check that out, you can find out more information in our link in bio as well.
Meanwhile, we hope to catch you next year, and happy tokenizing.